Hello there, fellow Americans. It's that time of year again. No, not pumpkin spice latte season, but something almost as terrifying. Tax season is looming. Before you reach for the Pepto-Bismol, let's unpack the IRS's latest pronouncements that will affect your 2025 tax filing. Yes, you heard right. We're already talking about taxes for the year after next. Because apparently the government likes to keep us on our toes, even when those toes are tapping nervously towards April 15th. The good news, and yes, there is some, is that the IRS, in their infinite wisdom, has decided to adjust tax brackets and standard deductions for 2025. Why? Because inflation, that's why. That ravenous beast that eats away at your hard-earned dollars has forced the IRS's hand, leading to some potentially positive changes for taxpayers. So what does this mean for you? Well, it could mean a bit more breathing room in your budget. The adjustments are designed to help offset the impact of rising prices on your wallet. While it might not be a windfall, every little bit helps, right? So, as you start gathering your documents and preparing for the inevitable, remember that these changes are here to help you navigate the financial waters a bit more smoothly. Stay tuned for more updates and tips on how to make the most of these new tax rules. Here's to a less stressful tax season ahead. Now we know what you're thinking. The IRS adapting? It sounds almost like a joke, right? To something other than finding new ways to audit me? It's hard to believe, but they're actually making some changes. It's true, the IRS showing flexibility is about as common as a unicorn riding a Roomba through a car wash. But miracles do happen. In this case, they're actually trying to prevent something called bracket creep, which is a real issue for many taxpayers. Bracket creep is a sneaky beast. It can catch you off guard if you're not paying attention. It's what happens when inflation pushes your income into a higher tax bracket, even if your real purchasing power hasn't changed. This can lead to unexpected tax increases. It's like being upgraded from economy to business class, but instead of comfy seats and free drinks, you get hit with a bigger tax bill. Not exactly the upgrade you were hoping for. Not exactly an upgrade, is it? It feels more like a downgrade in disguise. So the IRS is adjusting the brackets to try to keep you in your pre-inflation seat, so to speak. This adjustment aims to make sure you don't end up paying more just because of inflation. Okay, enough with the metaphors. Let's get down to brass tacks and dive into the nitty-gritty details of the 2025 tax brackets. Understanding these brackets is crucial for effective financial planning, whether you're an individual filer, married couple, or head of household. Here's a handy-dandy table showing the new tax brackets for 2025. These brackets determine the rate at which your income will be taxed. Filing status: 10%, 12%, 22%, 24%, 32%, 35%, 37%. Let's break it down by filing status, starting with single filers. Single filers. If your taxable income is up to $11,925, you're in the 10% bracket. For those earning between $11,926 and $48,475, you'll fall into the 12% bracket. If your income is between $48,476 and $103,350, you're in the 22% bracket. For those earning between $103,351 and $197,300, the rate is 24%. If your income falls between $197,301 and $250,525, you're in the 32% bracket. For those earning between $250,526 and $626,350, the rate is 35%. And finally, if your income exceeds $626,350, you're in the 37% bracket. Now let's move on to married filing jointly. If your combined income is up to $23,850, you're in the 10% bracket. For those earning between $23,851 and $96,950, the rate is 12%. If your combined income is between $96,951 and $206,700, you're in the 22% bracket. For those earning between $206,701 and $394,600, the rate is 24%. If your combined income falls between $394,601 and $501,050, you're in the 32% bracket. For those earning between $501,051 and $751,600, the rate is 35%, and if your combined income exceeds $751,600, you're in the 37% bracket. Now, for those filing as head of household, if your income is up to $17,000, you're in the 10% bracket. For those earning between $17,001 and $64,850, the rate is 12%. If your income is between $64,851 and $103,350, you're in the 22% bracket. For those earning between $103,351 and $197,300, the rate is 24%. If your income falls between $197,301 and $250,500, you're in the 32% bracket. For those earning between $250,501 and $626,350, the rate is 35%. And if your income exceeds $626,350, you're in the 37% bracket. Now, before you glaze over at the sight of numbers, remember, these are just the brackets. They determine the rate at which portions of your income are taxed, but they don't tell the whole story. Your actual tax liability depends on a whole host of other factors like deductions, credits, and whether you can successfully claim your pet goldfish as a dependent. Spoiler alert, you can't. But understanding these brackets is the first step in navigating the complex world of taxes. So, take a deep breath, and let's tackle this together. But wait, there's more. The IRS is also giving standard deductions a boost in 2025. For those who don't speak fluent tax code, the standard deduction is the amount you can subtract from your income before taxes are calculated. It's like a free pass for a chunk of your earnings, and who doesn't love a free pass? Here's what the new standard deductions look like. Filing status standard deduction. Single filers, $15,000. Married filing jointly, $30,000. Head of household, $22,500. A higher standard deduction means less of your income is subject to taxation, which could put more money back in your pocket. And by pocket, we mean your bank account, because who carries cash anymore? Section 5. Taxpayer impact, potential savings on the horizon. So, what does this all mean for you, dear taxpayer? Well, the potential for some sweet, sweet tax savings. The adjusted brackets and increased standard deductions could mean a lower tax bill for many Americans. And who wouldn't want to give less money to Uncle Sam? It's not like he's using it to fund universal healthcare or anything, but hold your horses before you book that trip to Aruba. The actual impact on your tax liability will depend on your individual circumstances. It's like trying to predict the weather in Chicago. You never really know what you're going to get. But hey, at least there's a chance of sunshine, right? Section 6. Hypothetical examples. Putting the changes into perspective. Let's get down to brass tacks with some hypothetical examples, because everyone loves a good hypothetical, right? Imagine a single filer, let's call her Sarah, earning $50,000 annually. With the new brackets and standard deduction, Sarah might find herself owing less in taxes compared to previous years. Now that's a reason to smile. Now, let's consider a married couple, John and Jane, filing jointly with a combined income of $100,000. Thanks to the adjusted brackets and higher standard deduction, John and Jane might see a decrease in their tax liability too. That means more money for date nights, or maybe just paying off that pesky student loan debt. Section 7. Beyond the brackets, other notable tax changes in 2025. But wait, there's even more to this tax tale. The IRS also made some other interesting tweaks for 2025. For example, the Social Security cost of living adjustment is projected to be 2.5%, which is good news for seniors who rely on that sweet, sweet government cheese. Oh, and let's not forget about the Earned Income Tax Credit. It's getting a boost too, which is great news for low-income families trying to make ends meet in this crazy mixed-up world. Section 8. Texas taxpayers navigating a unique landscape. Now we know what you Texans are thinking. Hold on a minute, we do things a little differently down here in the Lone Star State. And you're right. Texas, in its infinite wisdom, doesn't have a state income tax. It's enough to make a tax lawyer weep tears of joy. Or maybe that's just us. But before you start doing the Texas two-step, remember that Texas makes up for its lack of income tax with other fun levies, like property taxes and sales taxes. So while you might be off the hook for state income tax, you'll still be contributing to the great state of Texas in other ways. Section 9. Staying ahead of the curve, a call to financial awareness. So there you have it, folks. The IRS's 2025 tax changes, explained in all their glory, or at least as much glory as tax changes can muster. The key takeaway? Stay informed, plan ahead, and maybe consider consulting a tax professional. Because when it comes to navigating the complex world of taxes, it's always better to be safe than sorry. And on that note, we'll leave you with this thought. If you're ever feeling down about your taxes, just remember, it could be worse. You could be paying taxes in Denmark. And trust us, you don't want to be paying taxes in Denmark.